Well, hello. Yeah. Well, thank you very much. My name is Boonman. I'm very pleased to be here and to present to you. I'm also pleased to see that there are so many Korean companies actively participating in the discussion, and we would like to encourage that participation as much as possible. We're here to answer and address any issues you may have, so please ask any questions you would like. Short introduction. I've been involved in carbon markets since 2003. I joined a utility called Nuon, where I was a carbon analyst, and I was actually involved in the first carbon trade in Europe. And it was so fascinating that I decided to not leave the carbon markets at all. And despite the downturns in Europe, I'm still active in the carbon markets. A lot of my colleagues have moved into other markets. But I think it's fascinating, especially here in Korea, where you are at a new market, at the inception of a new market. And of course, things are very complicated in the beginning. The same experience we had in Europe. But I think, you know, over time you'll find out the things, and it can actually give you a competitive advantage. I'll say more about that. Second point I want to make, I've also been working for a bank, and to answer the gentleman's question about SME participation, I think you do have a role in there. I think you can develop products. You can, for example, pool allowances. You can create funds to co-invest with your small, medium-sized companies in offsets. But you could also take their offsets as collateral and provide a loan for that. So you value those collaterals, you take a haircut, and then those companies can convert it into cash, which they can basically use to run their facilities. Also, you can insource the risk management tools, and I'm very happy to detail that experience later in one of the breakout sessions. Second statement I want to make is that I think that Korea is already indirectly linked to Europe through the Korean CRs. We heard a lot of questions about linkage after 2020, but effectively, indirectly, you're already linked. I, at the moment, have Korean CRs on my registry account in Europe, which I can use for compliance, or I can sell it to a Korean company here today. So I have an option on that. And I think the third statement I want to make before I start my presentation is I think that the Ministry of Environment has already addressed many issues which can go wrong later, like we've seen in Europe. So I think a lot of these things have been tackled in an early stage. And yeah, I think that's a good thing to learn from other markets in general. About my presentation, I'm going to tell you something about the first phase in the EU ETS. It was a trial and error phase. It's pretty much similar where you're now. Before I do that, I'd like to say something about the company I work for. I work for a Norwegian state-owned hydro power company. We're actually the largest renewable energy producer in Europe. We're producing 99% of our power generated is coming from hydro and wind power. But we're also a compliance entity in the EU ETS because we own a few gas-fired power plants as well. We're mainly active in Europe, but outside Europe we have hydropower plants in Asia, in Latin America, and also in Africa through our daughter company, SN Power. We have around 3,700 people. And in many of these markets, like for example you see in Latin America, in Chile, in Peru, but also Brazil, a lot of discussion is taking place to also set up carbon markets. And for us, in order to set up things efficiently, we like to encourage linking as much as possible. Because if you have different schemes with different rules, it's sometimes very complicated to handle that within a company. And yeah, the more linkage there is, the lower you have your abatement cost globally, and the more efficient you can set up your operations. We have a direct exposure, as I already mentioned, through our gas-fired assets. So we've been through all the pain on monitoring, reporting, verification, allocation, benchmarking, grandfathering, accountancy issues, deciding when to run the power plants or not, taking carbon into account. It's been a painful process in the beginning, but I think over time you institutionalize it in your organization, and it's giving us an edge, I must admit. Secondly, we are indirectly benefiting from a carbon price, because carbon will have a knock-on effect on the power price. And why is that? Because typically power companies compete internationally for their fuels here, their coal, their oil, but they sell power locally. So they have an ability to pass on the cost of carbon to us, to the end user and to the industry. Our analysts could not explain anymore why the power price suddenly had risen based on fundamentals. And that's why they decided to become active in carbon. And that's why we, in 2004, set up a global environmental unit, which was basically looking to serve our clients, but also take our own exposure into account and actually benefit from the carbon market. So instead of seeing it like a liability, the company decided to see it as an opportunity. And so far it has been very good for us. How are we organized? Well, I think we have an upstream part. We have invested in the early days in the World Bank carbon funds, but also the KfW purchase program, over 50 million euros. And we've developed offset projects around the world, in all areas, even including in Korea. So just like Derek mentioned, he's been here in the early days. I've been here as well, contracting CDM projects from 2005-06 onwards. In the middle, we have what we call trading and portfolio management. And that's more the access, the market access to the exchanges. That's where the OTC counterparties are. And that's where we try to minimize our risk. That's basically where we sometimes do take speculative positions, but our speculative positions are not very large. It's mainly balancing positions, because we're active in multiple markets, not only in the EU ETS, but also in the Chinese markets, in the California markets. So how do you make sure that you risk management that with all different rules and sets? Well, that's a core team for us, which build a large portfolio management tool. They're mathematicians, just to make sure that everything is balanced. And then the last pillar of the business is the downstream business, and these are the clients in Europe, which we provide compliance tools, which we provide them access to the markets. They can basically, we can trade on their behalf, or they can trade on our behalf in the auctions in Europe, but we also do some advisory services as well to those companies. EU ETS Phase 1. Well, where do you start? I think the first thing is your corporate governance. How do you set it up? Do you leave it all, if you have multiple facilities, do you leave decisions taking over at the facility level, or do you centralize that decision taking? I think that's the most important thing. You will have to make somebody responsible for the carbon management. Somebody really needs to take responsibility in that. And then, of course, how do you all feed that into your system? Because if you have multiple facilities, one facility might have an over-allocation, another facility might be short, and you don't want those two facilities going into the market and buy from each other. You rather net that position. So that's why we, for example, choosing to centralize that activity. Then important is MRV, monitoring, reporting, verification. It can be very easy and it can be very complex depending on the industry you're operating in. And how do you actually manage that? How do you make sure that you don't have any breaches in your monitoring, reporting, verification? How do you make sure that all your parameters are up to date? Well, that's quite a process. And in Europe, there were a lot of consultancy companies who have helped us, for example, with that process. And I'm sure there will be those same companies, but also Korean companies, which are specialists and which can help you address these issues. Then an important question is internal abatement. It's basically the question, at what price do I switch from becoming a buyer to a seller in carbon? If you look at the market price, what is my internal abatement cost? At what point I need to buy allowances and at what point I can sell them. And that's when the moment you can sell them, that's when it starts to get interesting. That's where you can create opportunities. And then, of course, allowances versus offsets. There will be a separate session about offsets, but I think most of the questions this morning were related to offsets. I think it's one of the most interesting parts. It can lower your cost of compliance, but it's also risky. You have different cycles, you have different technologies. Offsets might not actually generate the expected amount of credits. How do you deal with that? How do you risk management that? And the way we've done it is by building up a portfolio spread across technologies, done it ourselves, but also to fund investments again. And yeah, it's a good way to basically trial and error and learn experience. And yeah, I think over time those offsets will become also very important in international market. If the Korean market after 2020 somehow get linked to China or to Europe or to other markets, offsets will play a key role in that. And by getting early in the game, you really can create a competitive advantage. Trading activities. Yeah, the early days in trading were quite boring, I can tell you. We're sitting the whole day on the desk talking to a lot of brokers in London, and if you're lucky, you did one trade a day. And then you were lucky. And there were maybe a handful of companies, 4 or 5 energy companies, maybe 1 or 2 banks, which were trading with each other, but the bid-offer spread was so wide that there was virtually almost no trading possible in early 2004. So the brokers helped to attract that liquidity. I think what Europe also was designed that a lot of roles to intermediaries were given. Foreign companies could participate, and a lot of products were developed around that. One of the issues in Europe was that the allocation had not been issued to companies. So how can you trade something you don't have yet? And that's where the forward market started. Normally you start with a market in spot, and after you have a liquid spot market, a forward market will be created. Well, the EU ETS was exactly the opposite. So if we first had a forward market with a December next year delivery, and then we, after a while, created this spot market. So that was an interesting development to see. Very important is standardization of contracts. I think there were roughly 3 main contracts. One was created by IETA for its members. One was created by EFET. EFET stands for European Federation of Energy Traders, which was the preferred trading document for the power sector, because they were trading power and fuels under that document as well. And then the banks had a preference for the ISDA contract, which stands for International Swap and Derivative Association. You can imagine if you have, let's say, 20 counterparties, of which 5 trade under an EFET, 10 under an IETA, and another 5 to 10 are trading under an ISDA, that complicates things because those agreements have different payment terms. They have a lot of different clauses. So when I buy something under a certain master agreement and I sell it under another, I don't have a net close position. I still run contractual risk between those. So I think then IETA, EFET and ISDA started to standardize their own contracts again and coordinate it in that. And I think that's helped to develop the OTC market, and hence trading volumes started to pick up. But you need creditworthy counterparties for that. Because if you buy and sell on an OTC basis, you only settle the trade and the payment after expiry, which can be a year or sometimes 3 to 4 years in the future. So how do you ensure your counterparty in 2, 3, 4 years is still there? So there were a lot of complications, so that's where banks played a significant role in that. They were providing the necessary liquidity in the market. On the one hand, you had utilities companies who needing to sell their power and buy the fuel and the carbon, so they were hedging. But you need somebody on the other side as a speculator, and that role was fulfilled by banks. And banks were not doing that on their own account, but they were also basically providing clients with access. And the banks started very simple, and then over the years they developed quite some sophisticated products where you had all kinds of optionality built in. And unfortunately, due to regulations, those banks have stepped out of the market. We only have maybe 3, 4 banks active in Europe, where in the early days there were more than 20 banks active. So that's one of the things, is what is not good at the moment in Europe, that we're lacking the participation of banks. So I think in that sense it's good that in Korea at least 4 banks are allowed to trade, and it's better to have more banks joining than less banks. After the OTC market, the exchanges developed products. So the futures contracts were created. And with an exchange, there's a difference. If I trade on an exchange, I don't know who my counterparty is, because the exchange will become the buyer to the seller and the seller to the buyer. And you trade on an anonymous basis. So now you only need to have one contract instead of having 20 contracts with counterparties. You only have one contract with an exchange, and you can buy and sell through an electronic platform. The exchange is asking you to deposit risk capital and is daily margining the position. So if today I buy carbon at 10 euros and I go long 10,000 tons, tomorrow the price is 11 euros, I get credited 1 euro times 10,000 in my account. If the next day the market drops to 8 euro, they take away 3 euros out of that account. So that daily margining makes sure that that risk is handled properly. And I think in Europe we had various exchanges. The dominant one was the European Climate Exchange. But we also had a power exchange, the EEX, and Nord Pool being active. And yeah, those exchanges slowly took over the role of the brokers. And especially after the recession, yeah, pretty much 80–90% of the volume moved to the exchanges. And then derivatives were created, like optionalities and so, but then you typically are a few years down the road, and that's where banks can play a big role in it as well. I think important to know is, you know, what drives the price of carbon. What is important to look at. In Europe, it was clearly the fuel markets. How much was coal, gas, power trading, but also weather. If you had a very wet period, a lot of hydropower was produced in Scandinavia and transported to Germany, and that was replacing coal generation, so hence less emissions, so prices were going down. So weather was an important role, and of course regulatory developments were very important. In the early days when, for example, a German minister made a comment about protecting its coal market, immediately the emission markets reacted to it. So it was very much regulatory driven as well. Only understanding those fundamentals which will have an impact on carbon, that allows you to make good decisions. I think the first thing you need to do is to look at where is this price going to be? Are we going to go up over the coming years? Or are we going to go down, or are we trading sideways? And you can only determine that to look at those fundamentals. Try to understand the various aspects which will have an influence on carbon. And it's not easy in the beginning. It will take some time to build that up, but there are of course also information providers which will give you price expectations as well. Typically allocations, whether or not it's through benchmarking or grandfathering, they will go down over time. That's a reality. The cap will go down. And of course, depending on where the prices are going, you can make decisions. For example, if you expect the price to go down, because the economic development will go down, then you can sell your allowances and buy them back in the future at a lower price. So you take advantage of the forward curve. In the opposite situation, you might decide not to sell your allowances, but to bank them to the next phase. And that all depends on where you think the price will go in the future. This was the price development of the first phase. As you can see, we had quite a bumpy road. We started in the 7–8 euros, went all the way up to 30 euros, and we ended at just 1 cent. Part of that period, the market traded on fundamentals. You could predict the carbon price by looking at the fuel switch level of a power company. That's the price of carbon whereby a utility is indifferent as how it would generate its power by using coal or gas. And of course coal is emitting more carbon than gas. But then over time regulatory developments became more important and it was less easy to predict where the carbon price would go. Then we had, when we were trading 30 euros, in less than 2 days the market dropped to around 10 euros. That was the day when the Dutch government announced in a semi-public meeting, very proudly, actually we're not short, but we're long. We have more emissions left over. And at that moment a lot of traders walked away and made some phone calls. And then the market started to go down, big time. That was representative for Germany, which was the largest emitter as well. And suddenly the market realized we're not short. There's no scarcity in the market. So everybody started selling, 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 selling. And that's one of the important lessons learned. You know, in the early days in the EU ETS, it was a test phase. There was nothing set up. How do you disclose information about supply and demand? And I think because of these lessons, we've learned the hard way. So then the European Commission was releasing the data publicly at the same moment. Well, the first time they did it, basically the website collapsed. So it was interesting again to see that. So there were a lot of lessons learned on that. I think in general, prices should fluctuate, because if prices don't fluctuate, you don't have much trading activity. Carbon price markets are giving you a good signal to take it into your investment decisions. If you, for example, want to invest in improving your equipment or opening up a new factory, you need to price in the carbon price for that. And that is what driving innovation, because basically by having a price on carbon, it's the most efficient way to abate, and it's technology neutral. It's not like a policy, like a government wants to build wind and subsidize wind more than hydropower, for example. No, carbon is technology neutral, and it basically drives innovation in the market. And that's why we at Statkraft believe that the carbon markets should be the cornerstone of the EU policy. And you have a lot of overlap in policies, like we heard here as well, between renewable portfolio standards, between car pricing and energy efficiency. And they can all live together until they are starting to cannibalize each other. And then you should make a decision, what will be my key policy instrument going forward? Will it be carbon pricing, renewable portfolio standards, or feed-in tariffs, or will it be energy efficiency? Because once those policies become successful, they eat on each other, and then it becomes very difficult to manage. In 2007, the exchanges started also to offer CER futures, and until that time, it was very hard to hedge your position. We had investments in CDM projects over the entire globe, but we could not sell CERs on a forward basis because there was no exchange offering it. There were a few OTC counterparties who were willing to buy those credits from us, but many of our competitors were in the same boat. They were all investing in offsets, and nobody wants to give a hedge on that. So in the early days, it was very hard to hedge that exposure. So a lot of parties use the EUA market to hedge it, and then of course you run a lot of basis risk. For example, you buy a similar example, you buy a Korean offset. You don't want to use it for own compliance for whatever reason. How do you hedge that position? Do you try to sell a Korean allowance forward? Or is there a party willing to buy that CR, that Korean CR from you? And I think banks can play a significant role in that. To sum up, I think starting early will create you a competitive edge. It is complex in the beginning. Don't be afraid. Don't be scared. Just trial and error. Talk to your peers. Talk to consultants. And try to build up a forward curve, a price expectation. And then also think about, how do I organize things? Do I put it at a CSR department, or do I put it at a trading department? What will be the freedom of facility levels versus centrally organized? I mean, centrally or facility level, both have their advantages and disadvantages. One is not the best solutions, depending on your situation as well. You need liquidity providers in the market, so therefore participate as much as possible. Over time, also make sure that not only banks can participate, but also, for example, foreign companies, because that will create liquidity again in your market. Think about linkage already, whether or not it's to the offsets or harmonizing certain basis rules in your legislation. And I think, by doing nothing is basically you already have a position today. You know what your allocation is, you roughly know what the price levels are, and you just have to make an expectation of at what price do I need to buy credits, and what price do I sell credits? Again, it's more than a policy tool. Don't see it like a liability, because it really can create possibilities like we've seen in Europe, but also in other markets.